Hello, everyone. Welcome to our last session before lunch. We have with us Elco, the founder of Paintgun. He's going to be discussing the 7 principles of user acquisition for fintech companies. Elco is a growth marketer. He comes from a Dutch and Korean background, and he's a digital nomad and technology entrepreneur with 10 plus years of experience starting tech companies. Currently, he's the founder and managing director of Paintgun.io, a sustainable advertising agency for tech startups who are in their Series ABC. Elco, I will turn things over to you now. Thank you for joining us.
Awesome, Casey. That's really good. Thank you so much for the kind introduction. I hope everyone had a really nice morning with good sessions so far. This one is just up for lunch. And yeah, I'm going to try to do my best to make it an entertaining one. Now, let's go to the first slide. Okay, so today is it's particularly an honor for me because my presence on the stage is not something that I had thought would happen before. But thank you, Mobile Growth Association, for granting me this opportunity to speak. I've always admired like the students when I was back in the days when I was in business school, who were like really good and ambitious and managed to get like these really cool positions in finance jobs. And you know, they were able to build their careers in these like very highly competitive environments. And while my path has been very different, one of building startups, somehow on the route now I'm led to you. And for all of you ambitious professionals from the fintech industry, I'm here to help you reach your vision. Now, I've posted a question here, and it's one that I often ask to myself, because as you know, with technological innovation, it's happening at such a fast pace and such a fast rate that in any vertical industry, you often see that there's like one player that is dominant, whether it's social or whether it's search or another vertical. It's like there's one company that basically rules the whole world, right? And then the question that I have is like, what is the dominant design for a fintech company? Because if we can figure out what the design is for that, then we might even see the first truly global digital bank. And I think that's a very, very extremely interesting challenge to tackle. And I think that's why a lot of us, a lot of you are also here in this talk. Now, what I'm going to share with you today is basically 7 principles for user acquisition. And I believe that these are fundamental to reaching good growth and user acquisition for fintech and digital banks. And now here's the agenda for the evening. So these are like the 7 principles. I just let you look at them for a moment. I won't go read them all out loud for you, but let's say that these are a little bit of the secret sauce of what we have discovered as working as fintech advertisers for, you know, like 2, 3, 4 years now for different clients. So yeah, let's go to the first point. Now, let's start at the beginning. And some of the information I'm going to share with you here might be familiar for you because you're working in this industry. But I think it's good to set the stage and the context a little bit. So let's go in it. Yeah, this kind of relates to the first point around like who's going to build that global monopoly bank. So yeah, over the past 5 years, we've seen that fintech startups received more than 125 billion in venture capital in over 8,000 rounds, with the trend mostly going upwards. Challenger banks received over 10% of those funds in 2019 and are changing the way consumers interact with their finances. Challenger banks are one of the tectonic shifts in financial services because they have like 5 to 10 times better unit economics for customer service, which enables them to enter new market segments beyond the reach of traditional players. So what you see is that the Challenger bank emerged, and the Challenger banks, they often relied on like these really big banks giving them access to license, right? These were these big institutions. And a modern banking core system that allowed them to operate and scale faster with spending much less on customer service. Challenger Bank, they basically grew like startups, building only relevant products that people really needed, nailing the marketing. And then before you knew it, the rebundling phase that you see here on the right was on the way. where you see like a reintegration from different products that were built on the market, and now things are basically coming together. So yeah. Now, what you see in this slide is that, it's like here you see how you can look at this financial system in a breakdown of different categories. But even this slide is not really up to date anymore, because anyone who follows the news will know that it's been a very busy week for Goldman Sachs. In the US, they've partnered with a company called Marqeta, and Marqeta has been selected to power Markets, which is their consumer banking arm. And through Marcus, Goldman is able to leverage an open API and webhooks and basically reach a lot of consumers in the US at a very high pace. And so while in this overview, it looks like they're in the license and the custody section, in fact, Goldman is making really big waves to be very active on the product layer, right? And so that's something that I believe all fintechs are now looking at and being very careful for, to understand what their next moves are, to understand if they can still be competitive. So now the question is, what is a dominant design for the fintech industry, right? And it's one where you have a revenue model and a pricing model that where you position yourself cleverly. And here you see 10 fintech companies that that have a different like model. And I just want to let you look at these numbers for a moment so you can like take it all in. Okay, so I gave you a moment to take it all in. And now the question is, of course, like, what do you think will be the dominant set of characteristics in terms of pricing and revenue that this global bank of the future will have and will be able to offer to their customers? Yeah. Principle 2, you want to communicate as an internet company. This is one of the tweets that Elon Musk made a little while ago. Now, what is a meme? A meme is a way of like culture information being shared, an element of culture, system of behavior that may be considered to be passed from one individual to another, mostly by imitation. It's all about imitating and transforming one idea into many different variations, and this is done by users of the internet. Now, it's not a secret that memes have become a huge part of our digital lives. Anyone who watched like the latest presidential inauguration has seen like a ton of like Bernie memes flying all around the internet in all kinds of like funny positions where Bernie is sitting in this chair with, and everybody loves like the mitten gloves, right? So now brands are increasingly seeing the power of harnessing internet culture, and memes and viral content can snatch people's attention in the infinite scroll that is on the internet. And a good meme keeps like the audience entertained and provokes engagement. And that's exactly what you see here on this slide. Because if you have ads that have like a casual tone of voice and are up to date with like internet current events and reference people, the brands that are emotionally resonant, you're able to like get really great engagement and also drop the CPA and user acquisition cost. And in many ways, it follows like this follows in a strategy of a big meme account called Fuck Jerry, which you see here on the right. And what you see here is that people are like commenting like crazy on these piece of content, and by having a lot of engagement, the Facebook will recognize this in its system, and then its algorithm will rank your ad in very favorably in the engagement metric, which is one of the 3 relevance metrics. And because of this, in Facebook's bidding system, the cost for your ad will go down. And that's something that you see here on the left, where you actually see an ad that is made for one of the fintechs. And in that one, you can see people are commenting and liking, and this really drives down CAC and CPA. And the way these ads look, of course, is that they kind of like hack attention because they bypass banner blindness. And banner blindness is something, the way your eyes are trained to filter and ignore traditional online advertising. And this is a way to do it. Now, looking at this one, then I want to ask you like, which one is an ad and which one is just content, right? And it becomes sometimes even difficult to see. But by doing so, people will engage with the content because they see it's not like an ad, and then in that way, it makes it like very appealing for people to to kind of like share with their friends, and all of these actions that users take on social will then help to bring down the CPA of an ad. So yeah, this is a quote from Virgil Abloh. Virgil Abloh is like one of the creative directors of Louis Vuitton, and his formula is basically always by staying very close to what is success and only changing 3% of an idea. And this is what I want to talk to you quickly about as well. Now, there is a company that you might have heard of, TransferWise, and what they did is they used this strategy of bank bashing, actually just found like a common enemy, and they made like billboards and ads and everything around it. And I saw these billboards being plastered all around, like in the London Tube, and they were like everywhere. And it was always like them complaining about the high fees in the system. And that's something that everyone could get behind. And they even went as far as creating a march in London where 10,000 people would be walking around naked, basically protesting against like the outrageous and the ridiculous fees that the banking industry was setting. And they got like a whole, like so many people like behind them. And in doing so, they just like rode this movement of people being fed up with the financial system. And then in doing so, they of course had like this brilliant way of doing marketing, right? And as you may also know, it's like one of the highest valuated fintech companies. Uh, I think the other example, it's not a fintech company, but what I really like about it is that it was done very cleverly, because Etsy, which today is valued at 26 billion, they grew a lot through non-paid means, right? So as you can see, there's a lot of direct and organic in their acquisition charts. And what they cleverly did in the early days, they rode and they appealed to the feminist crafter movement. So they went on the wave of like the anti-consumerist ethos that existed, and they got a lot of PR because of it. And basically, people were just sharing this company and app with other people around them because they felt that they stood for something important that they had to share with their friends, right, and their community. And so the question for fintech today out there as well is there something of a movement, of an ethos, of a trend of society happening that you can play into, that you can ride, right, and you can align yourself with, so that in that way you can get a lot of word of mouth because people will, give you a lot of respect and props for standing up for this idea. So yeah, candor is your secret weapon. This is something which is a quote from Edwin Catmull, who is one of the Pixar founders, and this is something of a learning that he discovered together working with Steve Jobs, and it's very fitting for also thinking about how you engage with your public and with your audience by bringing them into the dialogue. Now, what are people doing on social? Their three core functions are bragging, complaining, and rubbernecking. Where social and finance intersect is they're coalescing around those three use cases as well. At the end of the day, social and finance is just a lot of content. It's content that is anchored around seeing some financial transaction, but it's still just content. So the usual rules of social apply. When you're building something in social plus finance, you have an interaction layer and you have a transaction layer. The interaction layer is built around the emotional and cognitive pieces. That is content creation. That is messaging. That's all these social things that we see pop up. They appeal to these cognitive and emotional layers. Then you have a transactional layer, which is what the actual financial transaction is. It's generally much more of a functional use case. The magic in social plus finance happens when the transaction piece and the interactive piece are mutually reinforcing. That's where the flywheel on social plus finance really starts to spin aggressively. Now, What you see here on the right is also Consider Me Roasted. It's something that we put in one of our ads. And it was something that's working extremely effective because that was something that we were joking about how people were spending money. And they were, in this case, it's kind of a joke because who spends $844 on Frappuccinos? But it was something that got a lot of engagement in comments and therefore dropped the user acquisition cost for this particular client. And but like making jokes about the behavior of people spending money works in some cases, but it doesn't work in other cases. So we found out, for example, that being broke, that concept of being broke, is something that for some parts of society in the US, maybe more for a middle class, this concept of being broke is something you can joke about and something that a fintech company can joke about with their customers. But then, when it comes to another kind of bank, maybe one that serves more, let's say, less financially well-off part of society, then being broke is not funny, right? So that's not something that we can then joke about. So you also have to understand like how to play into the shifting attitudes of how people talk about money online and how this relates to how your target demographic is responding to and what their daily realities are. Yeah. The next one. Okay. So you want to help people get more money and a better service. Okay. So here's a slide taken from the Sensor Tower report on paid UA. This shows current, and what you see here on the right, I won't like tell you who made that meme there, but what you see here is a woman, asking about like, is it okay, these times with COVID and like, and questions that a fintech company can ask its consumers and how they care about them. It's very important, right? So it's like, it's a part of, because there's so many banks out there and they give all these benefits. And maybe primarily you want a fintech to help you with your money, protect it, be a good guardian of it. But then also it's very important that you get a good service, right? And you want to give people what they want and what they look for. And especially if we look at the US, where parts of the system have been completely ignored by traditional banks because they were not interesting from like an investment point of view. So they thought, okay, we cannot serve these guys because we're not going to make any money of them. So we just leave them. And then this group of people, some of them had to go to really almost like predatory practices of working with finance companies that gave them really bad rates and really high fees. And so everyone is like fed up with the fees. And then if you can offer like, I don't know, quick $100 or a really great service or a really fast app, that's something that can be really useful for the consumer. And in the end of the day, it's like, also going back to what Amira Yamouri, the CEO of Moss, said, it's like the bank of the future is a bank that is able to transform $1,000 into $5,000 because like a 1.2% gain is not interesting for this generation. And so it's very important to think about like, what is it that people actually want and expect from you? Classic growth hacker, Sean Ellis from Dropbox. Okay, so I'm gonna give you some quick 5 tips, and these are very tactical. So we talked about a lot of strategic and high-level topics, and now it's a little bit more about going lower level and how you actually can operate advertising on paid social. Now, so when it comes to tactile execution, one of the most important things is to build great audiences. And of course, you're going to build audiences based on your existing users, lookalikes, and like certain interests that they have. But we feel and we see that it's also very important to understand from your user base where they spend time and money online in a daily life, because those kind of interest groups could be really good levers to pull to build like alternative audience groups on that you can target on Facebook and other channels. So that's something that you want to look at, like, is it Netflix, Spotify, or Taco Bell, or other things? Now, in point two, another important thing is that you really want to use your best audiences for lookalikes. And what a lot of companies do is they build this list once and they upload it and then they forget about it. But what we believe is important is to periodically and continuously slice and dice these audiences to get to better core audiences of which you base your lookalikes on. So the idea there is that you, for example, have a lot of users in your app, but you know that 3/4 of them are not really high quality. So you remove them, right? And then you stay with your really good audience. Then maybe from this audience, there's a group that actually pays for your premium product. So then you look at those. And within the premium product, there's a group that actually is very active using your product. So then you take the best of the best and the best of the best. And it's a process of continuously testing, slicing and dicing to keep refreshing and recreating your lookalike audiences through which you can always reach new and better people. And point three, yeah, it's like a very common point now to work with influence. And what we've seen work particularly well is if you take content that has already gone viral by certain influencers and you simply purchase the content, stick a logo on it, you know, and have a tagline. And by doing so, it's kind of like an endorsement from that influencer. And often it's like, it doesn't even matter if they really talk so much about what you do, but if the content has already gone viral, it can be very effective for aligning them with your brand. So that's like a quick hack. And imagine if an influencer does something cool, like it can spit fire or something like that, or I'm just making something up now, but think of anything that is like attention grabbing on the internet and just stick your logo on it and spread it on paid social. Now, point four is about testing not only sending people to the app, but also sending them to landing pages. And we all have heard about like the battles that, you know, the giants of the tech industry are having with each other. And so because these large platforms like Apple and Facebook are in these fights with each other, of course they are fighting for profits. You want to spread your traffic to different sources and not only rely on Apple and Facebook to be the gatekeeper for the traffic that you send. And so also when you go through web, you have an ability to reach people through desktop. And maybe on a landing page, you can show much more information. And this could be helpful for them, especially when they have to fill in like sensitive information, like their banking details or social security numbers, and make them feel more confident to take like a larger onboarding step and create more trust. Now, the last point is one that I think all marketers should know about. Probably a lot of them already will know about, but it's the law of shitty click-throughs, which is from Andrew Chan from Andreessen Horowitz. And he basically says that, you know, whenever a channel is new and it's not saturated yet, that's the time to jump on it. Because the moment something becomes more popular, then people have recognized that this is a channel that drives ads. And so you want to be the first one to promote something on new channels because it will get a lot of traffic at a low rate. And this concept of the law of shitty click-throughs applies in many different ways. If you're like the first mover, you can often have an advantage. And we've also seen this even on Facebook, where last year they introduced this concept of automated app campaigns, and where they're kind of like imitating Google somewhat with their bidding system. And when they just launched this let's call it a feature inside Facebook ads, the automated app ads were ridiculously cheap, right? And also because they wanted to promote this. So like being a first mover is often a great advantage. Okay, last principle, ads incubator from quantity over quality. Now, the idea is that you have a concept. No, could you go back one slide? So the idea is that we have a concept called ads incubator, and we go from quantity to quality. And I just want to explain this real briefly because there's this story which I think beautifully illustrates it. there's like a photography professor, and he gives his class an assignment to take really good pictures, and he will pay them for it. And he says, I'm going to divide the class in two, and half the class, I'm going to give $1 for every photo that you give me. And the other half of the class, I'm going to give you $10 for every great photo that you give me. And what does the professor find out? He finds out that the half the class who was, was paid for every photo that they handed in, took much better pictures than the half the class that was paid based on really great pictures. So what he found out by that is by letting people produce a lot, you can find really great work in it. Whereas like if people really try to create something that is like exceptional, they might not even be so good. And this is a system that we have applied here at Paintgun. And so what happened is that we basically were given a task of launching ads and doing performance marketing for a fintech company. And then I remember getting the job, and we agreed with the CEO that we could get like 5,000 for doing some creative. And then in the first week, I spent all the money on creative. And then the second week, the CEO was like, "What we're gonna do next week?" And I was like, I don't know. And then from that moment on, CEO was like, "Okay, you know what? Why don't we just produce and launch 20 ads every week?" And we said, "Okay, let's do it." So we started implementing the system, and it was something that was really hard for us because we were just like pressing and working super hard to make it work every week. But then in doing so, we hit this like absolutely phenomenal success where one of the ads created such an outlier success that it dropped the CPA by like, I don't know, 200, 300% compared to the other ones. And the CEO was like on Slack, like raving about it, calling it like records on records. And what I attribute to this success, and I think the CEO does as well, is really this concept of ads incubator, one where you just like aggressively, systematically test a lot of ads week over week. And it goes back to the idea that you cannot force innovation, but you can systemize it. So yeah, that's it for the last principle. And on this ads incubator note, we just quickly run you through how it looks inside our product. So this is, if you happen to work with us, then we basically load up all these ads for you, and then you can click approve or not approve. And then you basically, request edits if you don't like something. And then finally it's loaded up to Facebook. And then you see like what the results are. And then we give you all kinds of like creative insights on these ads. And that's something that we at Paint can eventually help you with. And then we generate savings for you. Here's a screenshot for one of our clients. And that's it. Thank you so much for listening today. I hope it was helpful and informative for you. And if you have anyone has any questions, please let me know.
Awesome. Thank you so much, Elco. I do also want to mention that Paintgun is one of our sponsors. Please go check out their virtual booth. Elco, are you going to be available in the networking lounge as well? Sorry, I can't recall.
Yeah.
Awesome. Fantastic. And then also to our audience, we are holding a meme contest. So dovetails very nicely with this session. So go check out the contest area and feel free to participate. Enjoy your lunch, and thank you, Elco, once again for speaking at our show today.